Broadcom reports its second quarter earnings tonight after the close, but if you're holding custom silicon into this print, you're walking into a highly fragile setup. This chart shows the 5-day returns across the custom silicon basket. The entire sector just sprinted. Over the last week, Marvell ran up 44. This chart maps the upside remaining to Wall Street's mean analyst targets, giving us the cleanest picture of how thin this setup is. Nvidia still has the most room to run, with 30% of upside left to its target, but Broadcom is constrained to just a 6.5% cushion. That is roughly $31 of breathing room above spot, and every other name in the basket is deeply negative. Dell, AMD, and Marvell are trading hundreds of dollars above the analysts' models. Because Broadcom's price already walked up to meet the analysts' targets, the safety net is gone. The earnings print tonight has to do 100% of the heavy lifting. We can see exactly why that cushion disappeared on this chart, which tracks Broadcom's price target hikes by major firms in mid-May. In a 6-day window, 4 major firms moved their price targets into a crowded cluster. Wells Fargo moved its target up 27%, and TD Cowen hiked by 23%, pushing models into the 500s. All 4 of these massive hikes were maintains, not upgrades. Analysts were essentially adjusting their targets to keep pace with the stock price that had already run away from their previous models. As a result, the consensus stack is effectively maxed out. 43 of the 47 analysts covering the stock are already sitting at a buy rating or better. The institutional bid arrived early. There are no positive rating upgrades left to act as a catalyst. So, while retail sentiment remains high, we need to check what company executives are actually doing with their own capital. This chart visualizes net insider flows over the last 90 days across the custom silicon basket. Broadly, the entire sector is taking chips off the table. Dell saw $957 million in outflows, and AMD cleared $278 million. Broadcom sits right in the middle of the pack here. Insider sold $79 million net with exactly 0 buys, but inside that $79 million is a highly concentrated cluster of sales that occurred precisely 8 weeks before tonight's print. Inside a 48-hour window on April 8th, CEO Hock Tan, the Chief Operating Officer, the Chief Financial Officer, and a senior product head executed sales. This doesn't mean insiders are calling a market top, but it does mean holding. Through tonight's print requires you to risk your capital right after the people running the business remove theirs. At 4 o'clock, this chart maps the 4 triggers dictating tomorrow's direction. The most crucial is the AI semiconductor guide. The line Marvell, Dell, and the basket will reprice on. Next, total revenue must clear $15 billion, and VMware's operating margin must hold above 70% to defend the software thesis. Technically, the stock must hold $480. Breaking $440 unwinds the May rally. One wild card, Broadcom is reportedly backstopping $25 billion of Anthropic's financing. If validated on the call, the narrative shifts to infrastructure banking, the only scenario where long-term potential outweighs short-term risk. This chart maps the expected stock reaction across 4 realistic earnings scenarios. Even in a flawless print with a raised AI guide, upside is capped around 8 to 12%. Compare that to the downside. A soft AI guide triggers a 10% drop. A full miss sends the stock down 18%, erasing 6 weeks of gains. If Broadcom simply delivers what it promised, profit takers exit, leaving the stock flat to down 3%. For risk managers, 3 of 4 realistic scenarios open flat to down. The asymmetry is broken. The Christian is too thin, the analyst's tape is spent, and insiders sold. The read into the close is watchful, not bullish. For the full analysis, visit marketdecode.ai, subscribe so you don't miss tomorrow's decode.